talk is officially kicking off the race for the White House this week. Someone here says that will kick off the great debate about taxes in America. Good morning, everyone. I'm Cheryl Casoni in for Neil Cavuto. Let's get the bottom line. Here with us today, Charles Payne, Tracy Burns, and Gary Kaltbaum, along with Joel Schlesinger and Peter Schiff. Charles, think the election's going to be about taxes?
I really do. I mean, obviously we know economics, but the bottom line is taxes, and because it's the Democrats are coming at it from an attack on the rich, an attack on these people who have been taking money from you. In other words, split the country, politics of envy, Robin Hood approach. Will take the money from these guys who really don't deserve it or somehow stole it in the first place and give it back to you. It's all going to be about taxes.
So that's why that's going to become the front issue next year. All right, Peter, you agree with that?
Well, I think it's going to be an issue, but I think the economy in general is going to be a bigger issue. I think certainly by November it'll be obvious to just about everybody that we're in a pretty severe recession. I think a lot of the voters already know that. Just some of the people here in Wall Street haven't figured it out yet. But I think that the recession, the economy in general, is going to be a much bigger issue. And unfortunately, I think, it's not tax cuts that we need. We really need a lot of spending cuts. The government has to cut spending, because if they cut taxes and then just print the difference, what we get is inflation instead. So we have a little bit more money in our paychecks, but we have to pay a lot more for food, we have to pay a lot more for energy, and of course eventually we're going to see a big increase in interest rates as a result of all this inflation.
Well, Gary, that's on the assumption here, though, that there's going to be job losses next year, and some people are saying there's going to be job growth in 2008.
Well, look, I'm a big believer that, there's been a lot of people that have been calling for sessions for many years, and I'm not there just yet. There's no doubt there are some areas of the economy that are in recession and are problematic. Look, but I think this is going to be a huge determining factor for one simple reason. The parties are at polar opposites. You have pro-growth versus pro-government, and you know where I stand on this. I want pro-growth. The Democrats, all they want to do is make you pay more. The Republicans want you to keep more, and I'm on the Republican side here. It's going to be a big, big thing going forward.
Jill, what do you think?
I think that when you see images from Pakistan, like we've just seen over the last 2 days, that the tax issue is way on the back burner, and I think that if there is more instability in the world, people are going to be hyper-focused on issues that are global in nature, and I really don't hear a lot. I host a weekly radio show in New England. I have not heard one person call in about tax issues.
But we haven't got to tax season yet. Wait till March.
And you know what, they'll call in, they talk about it, but I really have to be clear that people are calling in that the one thing that I think is very clear, there are a lot of different economies right now. There are people who, yes, sure, I'm concerned about taxes. There are people who are a lot more concerned, it seems to me, about health care, about whether they're going to lose their jobs or not, and I have not heard anything, even during the past tax season, where people are hyper-focused that they're paying too much in taxes. You know why? Because they're not. We're paying the lowest level of taxes in the post-World War II era.
Well, but Tracy, some of the Democrats want to change all that. They want to take away the Bush tax cuts.
Oh, and if they get in office, they will. But I think, to Jill's point, we're very short-sighted. Last week when they took a poll as to what was the top issue for candidates going in, people want to hear about the economy. The economy was the problem, not the war on terror, nothing like that. Well, if you took that poll today, I bet you'd get a very different answer because of what just happened. So when we get closer to the election, whatever that topic is of the moment, that will be the most important topic for the people, and the candidates should focus on it accordingly.
But let's face it, though, you know what? The war on terror has been put on the back burner by the liberal media because, you know what? The surge is working. The surge has worked really well. Violence is down a lot. So the Democrats don't talk about Iraq, and the liberal media doesn't talk about it. And as far as tax cuts, Joe, you're right. People aren't really talking about it because they don't realize how close they are to being taxed to death. Right now, you're absolutely right. It's a wonderful thing to have low taxes because these low taxes, Peter, they have been working.
Well, Charles, the biggest tax everybody's paying right now, especially the middle class, is the inflation tax. The average person is getting killed by inflation. The cost of living is skyrocketing. Next year, you're going to see much bigger increases in the basic necessities of life.
So imagine adding more taxes to that inflation.
No, I don't want to add more taxes, but we have to cut government spending. If you just cut taxes and keep spending money,
you got a point.
Gary, jump in here.
Yeah, you got to remember, though, it's all about what the politicians make it. The Republicans right now have a real good entry point here. You have this trial balloon that came out by Rangel where they want to raise taxes on the highest rate, 39%, plus a surtax, which is an absolute joke. Capital gains going up, estate tax going back. the Republicans really have a real entry to get into this. Now, look, as far as terror, that's going to be a moving target. You know, we had a tragedy this week. If we end up with some more things going on in 2008 towards the election, no doubt that's going to pick up again. So it is going to be a moving target. But don't take taxes off the table. Dollars are important to Americans.
But Cheryl, your point is a good one, because come March, when people start doing their tax returns and they're all paying AMT, taxes are going to be on the forefront, and everyone is going to be concerned about them yet again. So it might not be on the top of the list at the Iowa caucuses, but anything that happens after March, they better be addressing that.
Well, Jill, that's a good point there, is that that's a tangible thing. What we pay in taxes, we see that money in dollars and cents. It becomes not a campaign rhetoric thing, but a real thing on your bank account.
Yeah, and I think it's always a funny issue, because when you look at every single poll, people say, I pay too much in taxes, and I want increased spending on health care, I want better schools, and there's that amazing disconnect that the electorate has always had, which is, I want more, but I don't want to pay for it. And so I think that the problem is going to be, for any Democrat who gets in, who wants to raise taxes, is going to be fighting an uphill battle. I think it's going to be a hard case to make for Republicans who say, we're really good guys about taxes, except that we spent like drunken sailors over the last 8 years.
Well, who has been clear, though, on the Democratic side about what they are going to do with taxes?
I looked through this. You were very kind enough to send us a little bit of the tax proposals. There are a lot of gaping holes in every single candidate's policies.
Yes,
and I was just mystified by that, to think, wow, you know, we're pretty close now, right? We're within months of really getting this thing kicked into gear. People are not talking about tangible plans that they have. None of these candidates are.
And the biggest gaping hole is the fact that the so-called middle class is a moving target. You know, of course, a year ago, we were going to attack everyone who made $1 million. Then it was $500,000. Now it's around 200,000, maybe 100,000. A whole lot of people out there who have been buying into this Robin Hood thing that the Democrats are selling them may find themselves on the wrong end of this. Yeah. Maybe 80,000 is rich, and you'll get your taxes raised.
All right, Gary, so we're going to come after you, the wealthy 1% of America. You ready?
Oh, thank you so much. Look, if I am a candidate, I take out those big poster boards and say, under the Democrat proposal, this is what you're going to pay. Under Republicans, this is what you're going to pay. And it is night and day and meaningful come voter time.
Peter, you keep saying that we're going to go into recession. A lot of people don't agree with you, obviously. But, you know, if we do start to see growth slow down in 2008, how is that going to affect people when they go to vote in November?
Well, I think they're more likely to want to vote out the incumbents, and unfortunately that's the Republicans, even though the Democrats are in Congress. And, you know, I don't just think we're going to be in a recession. I think we're in one already. It's just that the government statistics don't accurately reflect that.
Well, we're going to come back to you in the next block. We're going to take a quick break, but some very happy news for the... The U.S. economy in 2008, will it be a happy year or not? Time to go head-to-head. All right, Charles, the crystal ball.
Well, you know, if it's between boom and bust, I'll go with boom. I know the first half of the year is going to be tough. There's no doubt about it. But I think by the second half of the year, all these interest rate cuts will work their way through the system. Obviously, I think the housing market will be a lot better than it's been in 2007. The auto market, jobs, unemployment about 4.7%. And I think, Peter, inflation is going to be held in check.
Oh, not a chance. You know, this 2008 is going to be a really rough year for a lot of people. You know, home equity is going to continue to evaporate. We're going to see rather substantial weakness in home prices. Energy costs are going to keep going up. Food prices are just going to go through the roof next year. So that's really going to squeeze a lot of people.
But so far, inflation's been in check.
No, it hasn't. Who says? Look at prices. I mean, look, gold is up 33% this year. We haven't had a year like that since 1979. I mean, look, soybeans went through $12 a bushel for the first time.
Then why is the Fed cutting rates and not raising rates?
Because the Fed is foolish. They should be raising them. But the Fed is looking at the economy. We're in a recession. The Fed is trying to inject more inflation to fight off the recession, but they shouldn't be doing that. They should be raising rates and let the recession run its course instead of making it worse by adding additional inflation to the recession.
Gary, you agree with that?
Wow, I'm listening to Peter. I think I'm moving out of the country. Wow. Look, I'm in between. I don't think we're going to have a boom. The consumer's got a problem here. I've been talking about something called the wealth effect. It's been going north for a long time. It's now going south. People feel less wealthy because of the housing. But I don't see any recession. You know, this economy has shown itself throughout so many years, and people calling for the end of the world coming. I'm thinking it's not going to be great, probably in the 2%. We may get a bad quarter somewhere in there, but I think overall we're going to be in good shape. I'm looking at productivity, looks great. Interest rates remain low. If interest rates start to spike up because of inflation, then I'll have to think differently, but I'm okay with it. I think we're going to be in fine shape.
Jill, I'm going to put you on the spot here, boom or bust. I'm going to make you pick one.
I'm going to pick boom, but it has to be boom by the end of the year. Can't be, it's not a straight line. And I'm actually in both of these guys' camps because I agree with Charles, slow start, ends with a boom. But, the scary thing is I think we are in this very strange period where we're seeing the Fed reflate. It's going to push a lot of prices higher. Money's going to go into investment assets, could go into big precious metals. Again, I think that you're right in that way. But I think we're putting off our day of reckoning. And I think that that's why for next year, I think it's boom.
You don't think we've already had a day of reckoning? I think we've had a few in the last couple of
You know
months.
what? No, not at all, actually. Not at all, as a matter of fact. We had the shallowest recession in 2001. The market had 3 horrible years in a bear market, but we didn't have the consumer retrenched. Consumers haven't cleaned up their balance sheets yet, and that is going to happen. I just don't think it's happening next year.
That's the key, Tracy?
I think so. You know what? There's a reason people spring clean. There's a reason people purge. The market needs to do the same. I don't know when the R word became a bad word. It's part of the natural business cycle in many, many instances. And who's to say you can't still have growth during a period of time like this? People are and I think the media has a lot to do with it. They're making people scared. If we go into a recession, you're going to have to move out of your home and live in your car. It's not that bad, Your 401k will still survive.
You and I will, Charles.
Right, yeah, exactly. We'll move into his cars.
Gary. I'm going to move out of the country with Gary if things get much worse.
But you know what? Yeah, I do agree in a certain sense that we are so afraid of recessions. The last 2 recessions were very, very short-lived, and then after those recessions, we really took off as an economy. Also, I think let's say you're right and we are in a recession. I think by the time we figure it all out, we'll probably be out of it anyway. But you know what? I just think with employment as strong as it's been, productivity, I just see so many great things happening. Also, guys, listen, this year has proven that our system works. Everyone looks at the negatives, but I look at the fact that our market was still up this year and our country grew in the face of the most disastrous housing market since the Great Depression.
Charles, first of all, the reason that recession in 01-02 was so shallow was because Alan Greenspan inflated the housing bubble to try to minimize it. And now we have to deal with the effects of what he did to postpone that day of reckoning. Now we're looking at something far worse. And when you're talking about the stock market up, sure, it was up in terms of dollars, which depreciated. Priced in gold, the Dow lost 25% of its value this year. U.S. stocks are losing value. You can't be fooled by inflation and phony
let me just add,
Gary?
Let me just add to Peter's point here. My biggest problem with this Fed is there's been a problem of excessive liquidity out there, and they're trying to fix the problem with excessive liquidity, and that's why we're seeing gold shoot up. My big issue, that God bless it, that the bond market has cooperated. If the bond market starts to not cooperate and interest rates start to spike, then we're in trouble, not only in the economy, but also in the market itself, and I'm watching that very closely.
That's the big surprise for next year. I think the big bubble in the Treasury market is going to burst, and we're going to see a big increase in interest rates, and that's just going to throw gasoline on the fire.
Excess liquidity?
He's really not fun, you know that? I'm going to say, don't have him back.
Dr. Do.
Now, you know what? I think that, look, the reality is I think we're kind of all in agreement. When you throw a lot of liquidity into the system, it goes somewhere. It went into .com stocks and it went into the housing bubble. My guess is that the reflation and this liquidity is going to go back into the market. And I think, Peter, you're right. We are going to have a day of reckoning. I just don't think it's going to happen next year with the Fed cutting so aggressively.
All right. Well, we're going to leave it there, guys, but we have a lot more to talk about as the new year approaches. Hide all sharp objects from Peter Schiff, guys. Up next, our exclusive New Year's. Stocks that'll make 2008 a very happy new year for you. Time to get more for your money. All right, Gary.
I really like Oracle here. Very big company, and earnings and revenues are accelerating even though they're so large. It is the one thing I love in a stock, as well as it's really outperforming the market here. I think it's up a good 25% in 08.
You own it?
I do not own it yet, but going to.
Well, 25%, Gary. You got to get on it. I don't know. Charles, what do you think?
You know what, Gary? I like this stock, and I think probably Ellison could be the man of the year in Silicon Valley. He also had that IPO that did very well. But in that space, I happen to like Salesforce.com just a little bit more.
What do you like, Charles?
Washington Mutual, and I'll add the caveat up front. This is a high-risk play, right? We're catching a falling knife.
No kidding.
But you know what?
Catch it in your chest.
But you know, the bottom line is that the stock has come in a whole lot. Yes, there's high risk, but there's also a probability of high reward as well.
You own it?
No.
All right. What do you think, Gary? Go back. What do you think?
2 words, oy vey. Look, at 30 I said it was going to 20. At 20 I said it's going to 10. I think it'll get bought out at $5 to $7. There's nothing good going on there right now.
This from the guy that won't buy Oracle but recommends it. All right, Jill, what do you say?
I still like the emerging markets. I know everyone's freaked out about it, but I think next year is going to be another great year for them. ADRE is an exchange-traded fund that we own for our clients and I own personally. I still think that the emerging markets will have legs next year.
All right, Peter, what do you think?
Well, I think emerging markets are going to keep going up. I agree, but don't buy it if you're going to get squeamish. I do think you're going to have some big drops in these markets. I think there are some markets, especially the high flyers. But I mean, I think there's a lot less risk in emerging markets than the Nasdaq.
Right.
So if you want to take a risk, you're better off doing it there.
What do you got for us?
Well, I think in general people should stay away from stocks. It's going to be another bad year. I'm recommending the ETF GLD. I mean, gold has been doing incredibly well. As I mentioned earlier, it was up 33% last year. I think gold's going to go over $1,000 an ounce next year. I think U.S. stocks
So for all these
are going down.
For all those stock ownership folks out there, too bad, huh, Peter?
Well, you can buy gold stocks if you want because they underperformed last year. But stay out of stocks.
I'm getting depressed. All right, Jill, what do you think?
This is the best one because I own GLD, and so do all of my clients. And I love this, but it has to be a teeny tiny position in most people's portfolios, and that's my caveat.
And Peter, you own GLD, right?
I own everything that has to do with gold.
All right,
and it's a huge part of my portfolio, getting bigger every day.
There you have it. All right, guys. Well, the Dow is going to make a huge 20% move next year. But which way? Is that going to be up or down? And we're back to go on the spot. Jill, what you got?
Well, 2007 was the year of the small. Smaller investment returns, small growth in the economy, small movies, Waitress and Juno, the best ones of the year. 2008 is going to be the year of the big. It's going to be the resurgence of the biggest economy in the world by the end of the year. We're going to have the Beijing Olympics. It's going to be the election. It's going to be a big year.
You didn't pick a big movie, Jill. I'm disappointed.
I'm telling you, the movie of the year is Juno. I got it.
We're next year, right, Charles?
Well, I agree. I think the Dow is going to go to 16,000, but the big winner will be Nasdaq. So I think everyone should have some exposure to the Nasdaq.
Even now, after the run-up we've had.
Oh, absolutely, absolutely. This run-up, and Peter will tell you it's small, but he'll tell you it's small for different reasons. I think we got a lot of room.
Non-existent.
I think U.S. stocks are extremely cheap.
All right. Well,
they're going to get cheaper.
Tracy.
People spend more time planning family vacation than they do going over their portfolio allocation. And whether we are entering a recession or not does not mean you can have a bum year. So just prepare for the year. Go through. Make a resolution to go through your portfolio at the beginning of the year.
Did you not hear the recession's already here?
I ignored it.
To Peter's Schiff?
I ignored it.
Yeah, drive us all to drink. All right, Peter, what do you got going on?
Well, it might be a big year, just big losses. And I think what's going to happen now is we're going to see the subprime type loss scenario unfolding in other asset classes, such as bonds backed by auto loans, credit card debt. And that's really going to, pull the rug out from under the consumer when not only can he borrow money to buy a house, but he can't borrow money to buy a car. He can't use his credit card at a department store because the people who hold all this debt and Wall Street securitize these bonds the same way they did with the subprime bonds, they're going to lose a lot of money, and it's going to be a bigger credit card.
All right, well, boy. All right, Gary.
All right, let's talk important things. Tonight, the Patriots take them over the New York Giants. Eli Manning is blind. He can't even hit Mount Everest with a bazooka. And the Patriots are going to win by 40 or 50 points tonight for a perfect season.
Jill can't even move right now. She's going insane over that one. All right, well, my Fox on the spot is Neil not here again. So in his honor, you need the Fox Business Network in 2008. If your area doesn't have it, call your cable operator right now. Your money depends on it. He should have known I was going to do that if he wasn't here. All right, guys, it has been great to all of you. Happy New Year, everybody.
Happy
Charles,
New Year.
Jill, Gary, it's been great.
Thank you.
Hopefully 2008 is going to be really good for all of us. Except for Peter.
Regardless of what Peter says.
Despite what Peter says. All right, David Asman, Forbes on Fox is next.